Hello, and welcome to the September issue of the Dairy Market Update. This month we're looking at how markets have performed over the summer and looking ahead at what could happen through the remainder of the year. July and August tend to be relatively quiet months for dairy markets in Europe. The holiday season means buyers try to get ahead of the curve in early July to ensure they have enough product to cover them through the summer. This year was no different, other than the hot, dry summer starting to play on people's minds. Concern over how much the weather might impact milk production, and not just in the UK, means there is some nervousness in the markets. Butter buyers in particular are mindful of how high prices went last year. So after dropping back slightly in July, UK commodity prices for butter, skim milk powder and cream all rose again in August. Cheddar prices remained relatively unchanged. We know that average farm gate milk prices tend to follow the commodity markets, but with typically a 3-month lag. The general trend for milk prices at the moment is still upwards, thanks to the market improvements we saw through May and June. With market prices rising in August, we would expect average farm gate milk prices to continue to rise gradually through the autumn. The concern for farmers will be whether milk prices will be high enough to support the higher cost of feed. UK milk production has been running below last year throughout the summer, although perhaps not as low as many would have expected given the lack of grass. This has only been achieved by farmers using silage stocks and bought-in feed to try to hold up yields. The concern for many is the impact that will have later in the year. With silage levels depleted, many farmers will be forced to turn to bought-in feed to fill the deficit. The challenge is, where will that feed come from and at what cost? The hot, dry weather has impacted crops across Northern Europe. For wheat, global demand is expected to exceed production for a second year. Weaker sterling, UK crop worries and lower European production are all pushing grain prices up. We've also seen less than ideal conditions in parts of the US, Australia and the Black Sea. AHDB monitors the ratio of milk prices to feed prices as a rough measure of the affordability of feed. Despite the increase in milk prices, the milk to feed price ratio has been running below the 5-year average since the spring. Historically, we've seen there's a relationship between the milk to feed price ratio and milk yields. Unsurprisingly, when feed costs rise quicker than milk prices, profitability on farms suffers and milk yields tend to drop. With upward pressure on grain prices caused by lower production and increased demand, we would expect to see the milk to feed price ratio come under pressure. What we would normally expect to see under such circumstances is milk yields fall and overall production to drop below seasonal trends. The question is whether the market can support those expected cost increases and protect milk yields. At AHDB, we'll continue to monitor milk production and markets as they develop. If you'd like to sign up to receive regular updates from the Market Intelligence team, please visit the website. Thank you.